So I know you've had a really eventful, exciting day, and we are between you and many more festivities that are coming in the evening, so we'll try to keep this both engaging, exciting, and high energy. So my name is Daniel Armanios. I'm the BT Professor and Chair of Major Program Management, and I'm thrilled to be moderating what I know will be an exciting panel session today on building African infrastructure, collaboration for growth. I think this panel session is a really nice one at this moment because Africa is at a very unique inflection point at both the cutting edge and the trailing edge of infrastructure. So yes, African infrastructure is not with its challenges. We know about the issues with electricity access, the deficit gaps, and the like. And yet, we also have 21 countries with space agencies in Africa, some of the leading players and originators of mobile money, fintech, as well as new community-based AI developments. So how do we navigate both the deficit and also the promise that's available in Africa? And so today I'm really excited to have three leaders leading us in that journey today. The first is Yao Appiah-Lartey. He's the Partner in Africa Leader of Infrastructure and Capital Projects at Deloitte. We also have Kiseh Atonio. He's the founder and managing director of Sentinel Asset Management, a leading investment firm in Ghana that offers strategies tailored to meet the needs of institutional retail clients across various asset classes. And then finally, Dr. Oyedele, who you heard from in the Aboyoye, and is managing director of the Bua Foods PLC, spearheading Nigeria's premier indigenous food enterprise. So it's also, by the way, the third most capitalized on the Nigerian Stock Exchange. So with that, I will start with Yao. So you have extensive experience in structuring, negotiating, and closing complex multi-party infrastructure deals. What innovative financing models have you seen are proving most effective in bridging Africa's infrastructure gap?
Thank you very much, and hi to everyone. So as has been said before, and some of you may know, Africa infrastructure gap is quite big and it's widening year on year. So on average, Africa spends about $60 billion on infrastructure, whereas our infrastructure gap is about $170 billion per the Africa Development Bank. So we have been lagging behind for a number of years and the deficit keeps widening. That's because of the challenges that we have across the continent. One of them, and quite significant recently, is the fact that about 40% of African countries are at the risk of debt default or have already defaulted on their debt. And so it's very difficult for them to get commercial facilities for financing of infrastructure. In addition to that, we've got the systemic issues, regulatory challenges, lack of our inability to raise enough funding for infrastructure projects. So that calls for us to think through some innovative financing solutions. And some of the finance solutions we've seen, I'll just give specific examples and how we've actually implemented or supported some governments to implement them. So the first one is what is quite popular, is green financing or green bonds. A lot of projects that we've seen, particularly in East Africa, geothermal, have gone through what we call carbon finance or green financing. And that helps in a sense that you get cheaper financing. Some of the Euro bonds that we've seen African countries go for are coming at about 9% on a dollar facility. But if you go for a green bond, you go for a cheaper facility at about 5% or even less than that. We've also seen what we call diaspora bonds raised by Nigeria, 300 million. And then Ethiopia used to finance their Renaissance hydro dam. On average, Africa gets about $50 billion in remittance alone. Nigeria gets about $20 billion. Ghana is about $4.9 billion. Kenya is about $4.6 billion. These are funds that are available at the diaspora level. If you issue a diaspora bond and you're able to raise about $3 billion out of the Ghana $5 billion, that's a lot of money available for you to do investment in projects or lending. Then the last bit is what we call structured finance. And we've seen structured finance being used to finance projects in Ivory Coast, Ghana. Ghana, for instance, those of you who've been there, and those who've traveled to Ghana recently, you go to the airport, you're so proud of the Terminal 3 airport, which is like ultra-modern airport, the structured finance facility. We've also seen similar finance facilities implemented across. And then the last is what we call blended finance. The blended finance is the financing between commercial facility, which is relatively more expensive, and then aid. We heard this morning that President Trump always has a greeting for us every morning. We woke up one morning and he said, aids have been cut. So you are not getting the grants, you're not getting the aids again. So aids and grants are not sustainable. And so in between the commercial facility and the aids and grants is what we call blended finance. And we rely on philanthropic facility and public finance. It is cheaper because aid will come at 0% interest rate. We are not getting that. Concessional facilities are not coming as often as you expect them. So blended finance, and that is currently being implemented by the Development Bank of South Africa, for instance, where they are financing infrastructure projects using blended finance. And it's a combination of what you typically get as public financing that the public institutions support with, and then also support from donor community. And so that blended finance is available. It is patient capital. You see them, for those of you who understand finance, it's actually mezzanine finance. The long-term, patient capital, and relatively cheaper. You cannot finance a long-term infrastructure project at a rate that's more than 10%. You may not get the returns, you may not get the benefits. And so for you to do that, you have to think to do some innovative financing structures. And that's what we've seen in some of the projects that we are currently working on across Africa. And it is projects that we've seen from Northern Africa, where they're using a lot of green financing to finance infrastructure projects, particularly solar. And then in Southern Africa for transport projects. And then within the African countries, or across the African continent, actually transport sector and energy.
So maybe just one follow-up to kind of dig down, and then we'll move to the next panels as well. Whether it's blended finance, structured finance, green bonds, maybe even the way its mechanism is done through integrated project delivery, for example, do you see certain tools depend on which country context? Are there certain tools that work better in certain countries in Africa versus not?
That's a very good one for us. We work on two projects. So the first one I worked on was in Ghana. So Ghana, proud to us having a few challenges with the macroeconomic factors. Ghana was like Africa Rising, we called it, and you could get cheaper financing when you're doing projects in Ghana. Then we had challenges with our debt, external debt. We're currently going through an IMF program, so it becomes very difficult for you to finance. So then you have to think through some of the innovative measures. So at any point in time, the country dynamics change things. Then you move on to finance or to work on a project in Botswana. Botswana, very good macroeconomic indicators. But then the challenge you have is that Botswana Power Corporation have their peculiar challenges. So the risk of the off-taker, in addition to the macroeconomic factors, are things that you take into consideration. So it's country-specific. You can move from Ghana to Burkina Faso. Currently, as you've seen or you may have heard what's happening there, the political risk increases. It's just countries across board, but one has a higher political risk than the other. And so the political risk across these countries or across the various communities in West Africa actually influences whether or not you get financing for a project. But the good thing is, if you use any of these innovative financing structures, you get partial risk guarantee from the international community like the World Bank. And so innovative financing solution helps you to get around all the challenges that I've highlighted. And that has worked, whether you're doing the project in Accra, Nairobi, or in Gaborone. Thank you.
So this is a good segue to Kisei, because we're talking about different innovative financing models. We're thinking about both the country dynamics, both in terms of the major corporate or conglomerate that's running it, the country dynamics, their political risks, and we're talking about the stopgaps between kind of national and international. How does that dynamics play? And Kisei, you have extensive experience on the capital and security market side in Ghana. And so the question is, perhaps then, if we move to the policy or even regional development, what are some of the kind of policy reforms, regional developments that you think make these kind of developments and infrastructure possible?
I think when one is talking about policy reforms vis-a-vis infrastructure, I think the biggest game changer has been pension reforms. You know, pension reforms about a decade to a decade and a half ago has brought, quite a big pool of domestic capital, which I believe can underwrite infrastructure projects. Obviously, we are in a situation, and I think it was alluded to in the previous panel, where you have a lot of pension fund managers and investors focusing on government paper. And Yao just alluded to the fact that we defaulted on our external debt. We didn't just default on our external debt, we also defaulted on our local currency debt. So I think now there's now a focus on diversification. We all know in investment management, diversification is the ultimate risk management tool. And now you have a lot of these pension trustees looking to invest in other asset classes. I think over the last, a few years ago, the National Pension Regulatory Authority, which oversees, the pension industry in Ghana, came up with new investment guidelines, which provides about 25% to alternative assets. I think there was a lady, Adesua, who was saying earlier that, in Nigeria, even though you have 5% allocated to PE, they only have about 0.5% allocated to PE. Well, we have 25% allocated to what is called alternatives, and that encompasses project finance, venture capital and private equity, real estate, and I don't think we are even at 0.5. At the end of 2023, we had about $4 billion in assets under management. For a small country like Ghana, I heard Nigeria had 13, their big brother. We're a bigger population, but I think we're catching up very fast. You say? Moving target. I think the depreciation of the Naira has hurt them. I mean, we've also suffered chronic depreciation, but I think yours is worse. Big brother. Big brother always takes the lead. And we are projected to hit 6 billion by the end of this year. If you're to do a market sizing, that's about $1.5 billion. We all know that when it comes to infrastructure, these are big ticket transactions with long gestation periods. But, it is the capital markets which can provide that long-term funding when it comes to infrastructure. When it comes to, our banks can do it. They just have short-term funding. If you want to get a bank to do anything more than 8 years in Ghana, good luck. There will be that asset liability mismatch because they don't have that long-term funding. Pension funds, by their nature, are pension fund liabilities are by their nature long-term. So we need, to start looking at this diversification and ensure that we gear pension assets into the infrastructure alternative asset class. But it will require a significant paradigm shift in mindset. But there have been a few other developments which have helped. The SEC has come out with regulatory frameworks for REITs. I mean, the entity, I ran and founded. I was just telling Andrew maybe a few minutes ago that we set up the first real estate investment trust. We acquired from Actis an iconic 9-story office building. We raised over $25 million using local pension money and got debt capital from Nedbank in South Africa. There have been guidelines for real estate investment trusts as well. Guidelines have been issued, for the issuance of municipal green and infrastructure bonds. I'm yet to see any. But I think all this bodes well. So in as much as we're all crying when there was, we went through our domestic debt restructuring, I think it will turn out to be a blessing in disguise. In terms of regional development, honestly, I don't think much has been done. a lot more needs to be done. I know, I believe the AFDB supported the Securities and Exchange Commission in, something to do, I don't know whether it's funding or something to do with risk-based supervision. I think someone talked about infra credits, what they're doing in Nigeria. They're looking to do same in Ghana, basically leveraging on lessons learned in Nigeria. That will help because I guess it will help enhance the creditworthiness of bankable infrastructure projects. But a lot needs to be done. I know Madam Aruma Ota is here. She used to be DG of SEC. There's been a lot of talk about harmonization of our West Africa capital markets. We've been talking, since I started my career over 25 years ago, we've been talking about it 10 years, 15 years ago, 10 years ago. We're still talking about the same things now. I don't know what the bottleneck or hurdles are, but it is time for us to invest within, amongst ourselves, in the West Africa sub-region. And if we were to do that, it will open a whole new world of opportunities, for the sub-region.
And so I really like this kind of balance you have in your comments as a follow-up. So you have the institutional side in terms of finding reforms that bring in new institutional investors with the patience to kind of run the capital pension funds, also diversifying the asset classes, but then the tension of without harmonization, you have these transboundary issues. And it seems, provocatively, you could see a world where if the financial centers within the African continent, South Africa, Nigeria, Ghana, even worked with the Middle East, I think there's potentially enough capital flow that you could even crowd out the US and China, to really be honest. And so it's an interesting tension. So how do we take that down now to the locus of the work? Meaning, most of these infrastructure projects kind of have public-private partnerships. How do those reforms at the financial kind of capital scale, does that have any implication on how these public-private collaborations happen in this space? Does it help it, hinder it to kind of get the work done?
Obviously. I've talked about these reforms. I think we advised one of the local pension trustees in terms of there's the Ghana Ports and Harbour Authority, I think I got that. Yeah, Ghana Ports and Harbour Authority granted a 25-year concession to a local company. And I think they're trying, how much were they raising in debt? I think it was $75 million. And you have one of the local pension funds who we advised, and I think that's another first, putting in about $10 million in senior debt. So I know the Ghana Airports Authority are looking to raise, I think about $200 million, and you have pension funds, looking to partake in that as well. So yes, obviously it bodes well, and the pension sector is growing at a faster rate than the economy. If you look at it in CD terms, you're looking at 30% compounded annual growth rate. Yes, that's in CD terms. The depreciation has eroded a lot of that in dollar terms. But, I think there's huge, scope for upside when it comes to doing such transactions. And look, I think we'll need some regulatory-induced action as well, to limit these pension funds investing in government paper, but maybe we say do half, but it also behoves on us asset managers to ensure that we have the products, because right now, if you're to say, hey, limit your appetite to government paper, what are you going to invest in? There's nothing. So, and I must attribute that there's a certain knowledge deficit when it comes to players, when it comes to regulators, but we need to bridge that quickly. And once we bridge that, then.
So interesting. Then you get it down to the train of, okay, you want the efficiency, the operation flexibility of private sector, but you need kind of the playing field, the right enforcement contractual mechanisms coming from public sector, and then you have these kind of institutional investors that kind of can provide the money to be there in the long run. So let's move towards kind of the technological developments that may need to be to kind of underpin this, Dr. Ayodele, because I know you have extensive experience in engineering and operations necessary to underpin a lot of these major infrastructure initiatives, and you're doing quite a bit of this at BUA Group. I mean, what do you see, if you think of things that could improve Africa's infrastructure operations, what are the kind of key technologies you see could be at play here that could help in that space?
Thank you very much. I think we're taking it home because after you get the money or the investment, right? And then you need somebody who's monitoring how the investment is playing out. We're putting it in infrastructure. When the infrastructure is put in place, I think the next phase is the operation, and that's probably what the question is all about. Life cycle management is one of the key gaps that we do have in Africa, and I think very strongly that technology, as it were, will help to bridge those gaps in terms of at least the little that we get funded or investment for and that we put in place, ensuring that we use it properly for the benefit of what it's desired for, and also ensuring that it's stay for as long as generations to come. If you look around the Europe today, even where we are, cities today, I was just asking someone, why is everything looking ancient? He says, yes, it looks ancient from outside, but when you go inside, it are all modern. That's quite interesting. So technology will help us to bridge those gaps. And if we take it one after the other, looking at, say, energy. Energy, for instance, we have today what we call the smart energy, which actually speaks to how energy can be efficiently distributed and make them reliable, and also how we can integrate, other sources of energy, which is in line with sustainability, for instance, renewable energy, to be able to integrate them, and also help in terms of creating additional access to electricity in Africa, as it were, which we all know currently it's quite low in some countries. The second bit is to look at transportation. Transportation is very important. It's intelligent technologies, basically, that will help us to manage traffic systems. So we build roads, we build infrastructures for movement of goods and services at the seaport as well as the airports. All of these requires technologies that are reliant on big data, for instance, artificial intelligence, as a way of making it, durable for users and, of course, the public, for public good as it stands. The other bit I like to speak on will be on water resources. And that's where I'd like to give an example of what we have done in our agribusiness. Water resources and sanitation, as it were, what we have deployed is we have used technology to be able to cut costs, not only to operate efficiently, but also to manage water usage by more than 30%. So our fertigation process, which is basically an irrigation system and integrated with the fertilization of the crops, uses, for instance, we're using drone technologies to monitor the fields, to also apply fertilizers. The irrigation systems have probes on the fields that are helping to monitor the amount of water content in the soil so that you don't overuse water, over-apply water to the crops, as it were. So this technology is one of the things that we have deployed, and we're scaling them up, working with partners that are specialists in this area, Netafim precisely, to see how we can deploy this. So these are areas that these are technologies, as it were, that can focus on these infrastructural areas for better operations.
I'm really struck by this kind of connection of life cycle management, and then also the connection between infrastructure on the ground, let's say energy, renewable energy, et cetera, and infrastructure through the air, so drones, et cetera. And I'm wondering, provocatively, what this gives me a thought of is that perhaps some of the big environmental issues we have, like electronic waste, et cetera, if we could harvest those rare earth metals, that could feed into, precisely using life cycle management, to the elements and others that could build some of these drone technologies, sensor technologies, other things that could then, and then now all of a sudden, something that was a really issue, a big issue in terms of its pollution and environmental waste, now all the gift that everyone keeps giving us, we can now use it to our advantage, especially with the fights for rare earth metals. I'm wondering, on a follow-on, just to follow on this further, is there some technologies you think are receiving too much attention and hype, and then some that should be receiving attention but aren't?
I don't think so. We just spoke about access to electricity, right, in Africa to be very low. And if we also talk about the digital penetration or internet access in Africa, I think the number is around 38% thereabouts. It was mentioned earlier today, compared to global average of over 70%, as it were. So, where is it? The input is low, so the use utilization cannot even be measured. So first in my view, is we need to address the access to electricity, which obviously will improve digital connectivity, will make investments in the digital technology to be widened and be also inclusive, diverse for all communities. As you mentioned earlier in the earlier speakers have talked about the fact that the African countries are at the different levels of development. The problems also are also different. We heard also that languages are over, if I'm right, I think 500 or more, right? Or 1,000, if I heard that correctly. So which that means that we need to create solutions that can address each locality, to be able to increase, the use of technology and also deploy them. So everything rides on energy. Reality is that we all need energy, either from food, water, name it. Energy is critical to create that access and, of course, to then ensure that we can increase on the ability. So by and large, there's no underutilization there's no overutilization but underutilization because of certain other factors.
No, I like the point you're making, essentially, that it's the issue isn't the technology, it's the organizational, sociocultural context, and it's so distributed around the African continent. That's more of our issue. We have a few minutes now to leave it open for maybe a couple of questions from the audience before we close the panel. Does anybody want to ask a question? Yes, please.
Daniel, thank you very much. I remember you were sitting there when my sister Roma turned 60, and I talked about artificial intelligence. I am sounding the warning to Africans here that if we do not join the fourth industrial revolution, Africa will go to the fifth world. I've just finished a program here on AI. Out of a class of about 70 of us, only 3 are from Africa. Nigeria, Ghana, and South Africa. I don't know if that's how our junior brother Ghana will develop, but seriously, please listen. There is future of work. The future of work. What people are discussing is yesterday. The future of work will lead the world to what we call basic universal income, when you don't need to work anymore. Because the GDP of the world will be so high that people don't need to work. You just sit down and play golf, and get paid. Seriously. And in the AI world, we are now thinking that universities might be vestigial, because you need a professor, where you can have a cloud, GPT, all sorts at your fingertips. I remember in school, we used to do mental arithmetic. 8 times 8, 2 times 2. Now, who does that?
Nobody. AI.
Africa must be very, very serious, because this gap is frightening. America, China, India, STEM education, developing things. Who talks about oil and diamond and gold when data is the next oil? When chips, the entire African GDP is 3.5 trillion. NVIDIA is 4 trillion. the entire continent is 3.5 trillion. I'm not saying we shouldn't talk about food, agriculture, because robots will farm. They don't get tired. You don't need mechanics anymore because Tesla has just no carburetors. That is where the world is today, and that's where the world is going. And none of our presidents campaigns on technology. It's either tribe or religion or such mundane things. Nobody. Donald Trump has started his own 500 billion. 500 billion. I attend every AI conference in the world. The last one in Paris, Europe came up with about 20-something billion. I went to Doha. Doha launched the first Arabic language LLM called Fana. It speaks their language. We have no Swahili LLM. We have no Igbo LLM, no Yoruba LLM, no Hausa LLM, no Ewek LLM. Do you have any in Ghana? So please, young Africans, take AI very seriously. I graduated from this college in AI. I'm turning 68 on the 17th of March.
Wow.
Alvin Toffler, thank you. Alvin Toffler, an American futurist, said, and I quote, and I'll end here. The illiterate of the 21st century are not those who cannot read or write, but those who cannot learn, unlearn, and relearn, unquote. Africa, this is the time to learn. Thank you.
Okay. Yeah, one more, and then we'll open up to it. So one will be clearly on AI, and then we'll have one more, and then we can do. Yeah, please.
My question is for Lau, and as a lawyer, I'm really interested in having read your bio about all these fantastic contract negotiations you've done. I've not done any work on the African continent, not done any in infrastructure, even though that's the department I'm in now. So my question is, do you have any contract gems, tips, playbooks that you can share? Or if not, are there any specific pain points that you've come across when it comes to contract negotiations on the continent that you think, do you know what, the lawyers being the department of no most times could actually help to facilitate these things in a better way?
Thank you very much. And I'll give specific examples of some of the infrastructure projects that I've been involved in. The areas that, for most African government, they fail to negotiate on are maybe 2 or 3 key ones that you have to be particular when you are also sitting with all the top law firms, the White & Case and all of that. Sometimes they fail to listen to the advisors or consultants. First one is the termination provisions. And sometimes you are thinking that these guys, they read the provision before they signed it. I've been involved on one. We traveled to Dubai. We started raising issue where there was a flaw that is protecting the other party, and there was no cap that's protecting the government. So we told them that, look, you have to review this. The guy called us to the corner and said, this has already been signed. You were just asked to come and negotiate. So just tell them what they want to hear, but it has already been signed. The minister has gone ahead of us to sign the contract even before we went there as consultants. So termination provisions that have got these things are hidden in there. The other thing is also about the credit worthiness of the entities involved. Just make sure you have provisions around that. Because certainly you would have instances where the utilities company or the water company is not credit worthy. So then you have to have instances or issues to protect that. And then the last one is that engage consultants who have done the project before. In Ghana and across Africa, we've had arbitration cases that have been lost by government, resulting in judgment debts running into billions of dollars. You go to Nigeria, Ghana, Kenya, you'd have instances like that. That is because someone failed to read the contract. They fail to engage the right professionals. And in some instances, like the examples I've given, the professionals came when it was too late, and there was nothing you could do about them. And so that's the advice I'll give to you. Please come back to the continent, help your people to negotiate very good contracts to avoid judgment debt.
Before we go, I don't want to. So one comment to follow on. There's another interesting point. And then
No, I think she was.
oh, yes, please. Maybe we give just on the AI point. I want to make sure that we touch on it so that we discuss it. I know. But I think I don't want to bring up because I wrote an Oxford Answers piece that you can read on what I think is the promise for AI in Africa. So I don't want to spend too much time. But I think one thing I want to touch on based on what you mentioned also about the contraction also is that we also know that the digital infrastructure projects, the major ones, are often the most over budget, over time, overrun. And we know that there's a challenge, for example, even with the highest and most elite kind of information technology around high-speed rail and others that has created massive debt for government. So perhaps a question would be interesting is, in a world where we want to bring in AI, are we going to have to rethink how we finance it?
No, obviously.
But what would be kind of models you think could work potentially there?
Well, I think we have to make a conscious effort to invest in AI.
Yeah.
Because it's something that we cannot run away from. And that's the reality. I was at Mining in Durban. It's one of the biggest conferences in Africa on mining. And the examples that were given, previously you could take months and even several years to do exploration of mineral resources. With the invention of AI, it takes days. You can tell whether there's mineral resources in there, or even few hours to just come. So why are we spending time to educate people to do things that AI can do in seconds? And we take months to do it. So government cannot run away from investment in technology because technology is a game changer. And we have to make conscious effort to invest in it. And I'm surprised to hear only 3 people in the class of about 70 from Africa. So that means we should all go back and tell our government that the next class, Africa should be more than 50%. And that's making a conscious effort to invest in it. If you don't make a conscious effort to invest in it, what we are saying is very soon AI will take our jobs. They're not going to take our jobs because we are not prepared. The people who are prepared will take our jobs from us because they have taken or embraced AI.
So perhaps 2 points I'd make to follow on. I think integrate. There's maybe 2 possibilities. One is we often think of financing on a project level. And I think what's happening with AI is that you're able to do things at a transaction level. So we may have to rethink financing around how do you do it at a transaction level. In terms of if you want to run robotic surgery systems, others, how would you do it on a transaction level? Another one that could be interesting is we're going to have different players in the table. When you have AI folks, you're going to have computer scientists with operation engineers, others. So we're going to need more multi-party kind of contractual arrangements, maybe things like integrated project delivery, things of that nature, maybe where we'll have to go. But I think it's an interesting terrain in that space. And I don't want to leave one last question to our friend, and then we'll conclude, please.
And I like that you started the conversation about the infrastructure gap. But I feel like we mostly have these conversations without looking at the end users, which is like the ordinary citizen. And my question is actually based on accessibility and affordability. Because I want to find out how do asset managers, and for example, all these, a lot of investors are big on return on investments. Because they give a very short time and they want to make a lot of profits. And most of the time, the ordinary African is usually priced out of these things. And it looks like all this infrastructure that comes into the country or to the continent is only targeted at elite corporate people. It was earlier mentioned, almost every country in Africa's currency is depreciating. And you go to Ghana, you go to Nigeria, and everything is priced in dollar. In the foreign currency. Are there some sort of conversations being had by asset management people and all these investors about how to bridge this gap, not to price the ordinary African out of all these infrastructure? Because then if the infrastructure is being done and at the end of the day no one is using them, or they are entirely priced out of it, then what's the point? Is there a conversation happening where like these people, the end user, is also being like factored in? That's what I wanted to ask. Yeah.
So that's a very good question, actually. We've had instances where infrastructure has been developed and the end users have failed to use it because they could not afford it. It's a double lane highway that was built by government commissioned it, and it was a highly political statement that they made. They couldn't afford the tolls, so what they decided to do was to use an alternative route, which was untarred. You know what the government did? They tolled the untarred road and made the road that he had constructed free, and he came back to the lane. So that's a mismatch. We have historically used what we call PPPs, public-private partnership. They have failed because we failed to structure them properly. We do not have the right regulatory framework to build PPPs. So elsewhere in Kenya, they do not call triple Ps, they call it perpetual pending projects. Because PPPs have been there for so many years, we've not executed them. What is the current solution or recent solution to this? It's the finance, a function of the financing. If you go for impact investing, the outcome or the end user will not be priced out of the market. We have been typically or historically been financing our projects with commercial lending, which are relatively more expensive. And so the investor comes in, he wants a return in the next 15 to 20 years. There is no way the current tolls that are being charged, whether in Lagos, Nairobi, will be enough to pay or to get that return in 15 years. And so a lot of end users will be priced out. But if you are looking at impact investing is supporting AI in villages. It's supporting rural telephony in villages and rural communities. So if we are using the financing that is cheaper, it affects the end user, and it makes it cheaper.
I'm sorry, we have to end here. So thank you so much, everyone, for your time. Thanks.